Now they don't want to buy the bonds. We've had, pension funds, others, they don't want to buy that bonds. Foreigners don't want to buy the bonds. So then the way that works is interest rates have got to go up to a level that constricts private credit demand. And when that happens, then there's less spending. That's the mechanics. So there's that trade-off, and I think we're going to be in an environment in which they're trying to navigate these two difficult. You don't want too much inflation, and you don't want too weak an economy, and so they're trying to navigate that, which will be probably something like the 70s. And that's all happening in the context of the political conflict, which is very important, right, and the international conflict, because the international conflict has bearing on things like inflation, supply lines, and all of that.
Ray Dalio is the founder, co-chief investment officer, and chairman for Bridgewater Associates, the world's largest hedge fund by assets, as well as a leading expert in investment philosophy, corporate management, and author of the #1 New York Times bestseller Principles. In his latest book, Principles for Dealing with the Changing World Order, Dalio provides insights from more than half a century of studying the history of the world economy and its ties to the rising and falling of great powers and how they fit into a big cycle that has persisted and is at work in the present day. His findings are that the times ahead will be unlike any we've faced in our lifetime, and he gives practical advice on how to prepare for what's next. Dalio believes that the next 2 to 4 years will see both global economic and political systems change in unpredictable ways as so many uncertain events play out in geopolitics and supply chains. Dalio outlined how cash-strapped governments loaded up on debt while money was cheap and plentiful, but now rising rates are increasing their borrowing costs and threatening to plunge them into fiscal crises. Ray Dalio said the United States dollar is on the verge of devaluation on a level last seen in 1971 and that China is threatening the greenback's role as the world's reserve currency. Now we would take you to the video and listen to Ray Dalio speak about these concepts and the best way to be safe when everything comes crashing down. Listen carefully and don't forget to hit the like button, subscribe, and drop your comments after the video.
Many times in my life, things that surprised me were because they never happened in my lifetime before, but they happened many times in history. So, for example, then studying these earlier times, if they happen mechanistically, I need to know how they work. So I studied the Great Depression. That's why we anticipated the 2008 financial crisis, because the same things happen over and over again, but sometimes not in our lifetimes. And so there were three big things. There are three big things that are happening to us that haven't happened in our lifetime. I like to measure things so I can see them in numbers and charts and so on. And those three big things are, first, the amount of debt and money creation, how much debt we have, the rate at which we are creating it, and then where we're getting that money from, the Federal Reserve and other central banks printing it. So that has never happened to this degree except for the 1930 to 45 period, which I studied before, and I needed to go back and study that in history. The second of those two things is the amount of internal conflict, populism of the left and the right, irreconcilable differences, with the largest wealth gaps that have existed. We have a financial issue. We have an internal conflict issue that has very big implications for how well our country is run, but also what does it mean for taxes? What does it mean for the value of assets? I need to understand that. And the third was international conflict. So in my whole lifetime, the United States was clearly a dominant power, and we were in the American world order. 1945, the United States became the leading world power, counted for half world GDP. We had 80% of the world's money, because gold was money then, and we had a military monopoly. And so the reason that we were the world's power, that's why the United Nations is in New York, and IMF and World Bank are in Washington, so dominant. But we could see this conflict, this emerging competition. And the last time that happened was the 1930 to 45 period, and I need to study that. And so I studied that pattern, and these are the big things in our lives right now. but we are not acquainted with it. And so I needed to study the rise and declines of currencies, the rise and declines of empires. And because these cycles go on over a long period of time, I needed to see enough of those cases, so I had to go back, let's say, the 500 years. So I studied all of those.
In Dalio's view, it could soon become harder or more expensive for Americans to take out loans, mortgages, and other types of debt. The result could be less spending and investing, which would drag down the prices of stocks and other assets and plunge the economy into a recession. Dalio has previously criticized the Fed and the government for flooding the United States economy with debt and cash, which created an asset price bubble. He predicted the consequence would be annual inflation of 4% to 5%, well above the Fed's target rate of 2%, and interest rates above 4.5% for years to come.
If you give a lot of money in credit and you make it cheap enough, they will spend it. Okay, but when you create debt, it's stimulative over the short run and depressing over the long run. Because when you have to pay it back, then you have to earn more than you spend to pay it back. So what do you do with that debt? Okay, if you make it tough to pay it back, then what happens is you have an economic downturn. If you make it easy, you print the money. And that's the cycle. So when we look at what the Fed has done, the Fed and the government together gave an enormous amount of debt and credit and created a lurch forward, a giant lurch forward, and created a bubble, okay? And now they're putting on the brakes. Okay, so now we're going to create a giant lurch backward, I think, because it's simple. The amount of, we talk about inflation. Inflation is a very simple thing. It's the amount of money that's spent, money and credit spent, divided by the quantity sold is the price. And so if you take that money away, then you can't get rid of inflation. The way you get rid of inflation is to get people to spend less. And that is what an economic downturn. So the cycle goes like that, and then when you get to the point where, let's say, the economic pain is greater than the inflation pain, then you see them do the opposite. So we're going through that particular cycle. So it's, I think, a delusion to believe that, okay, what they're going to do is deal with inflation, and it'll all go away because they'll deal with inflation by doing that without realizing what that means in terms of that, what that means of buying power. Think about the supply-demand of bonds, just to give you, we have to sell debt. Well, the government is going to borrow, central government's going to borrow about 5% of GDP, so they have to sell bonds in that amount. The Federal Reserve is going to sell, or however run off the balance sheet, about 5% of GDP. That's 10% of GDP. Okay, who's going to buy the bonds? Who's going to buy that? How do, in history, debts decline relative to incomes? So you could go back and see the mechanics of that. And the way that happens is a mix of some amount of restructuring debts, and that is a deflationary force because one man's debts are another man's assets. And so some amount of restructuring is a deflationary force. You take buying power away from others. And then some form of debt monetization, and to get the stimulation, and they tried to get the middle ground. Because of the size of the issues we're dealing with, it's not something that we're used to in terms of its magnitude, I think. So, and then if we take the internal conflict factor, I think we have to look at all three because they play a role. And so it's traditionally, those three things are the perfect storm, right? They all affect each other. So if you have a bad economic situation, as you said, it affects one group of people and it hurts them, then you have an internal political conflict, right? The left and the right, the rich and the poor, and so on. And then that affects things, and vice versa. And then, of course, the external conflict, the cost of the external conflict.
United States Federal Reserve and Chair Jerome Powell will now feel justified in taking even bigger steps with interest rates to tamp down prices. If the Fed raises rates aggressively, the effects will be felt outside its national purview, he warns. Parts of the global economy will break, the worldwide downturn will blow back on the United States, and then everyone will find themselves running headlong into the dark realm of unintended consequences. Given rising interest rates meant to tame record-high inflation coupled with other factors like Russia's invasion of Ukraine rattling energy markets, the United States economy has more room for further pain. Only a fool does the same things over and over again and expects a different result. The warning bells have been ringing about the impending economic disaster, and it won't be long before we see its effect in full cause. What precautions have you taken to ensure that you are safe from this collapse? Let us know in the comment section. Also, remember to like the video, subscribe, and turn on notifications. Thanks for watching.